Good morning. It's Monday, December 1st. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. Glad to be back at the home office. Was lucky to get out of Chicago before that 10 inches of snow fell. Had to sit in the runway here for about an hour so they can de-ice and apply de-icer. Didn't know that was a two-step process here. So looking at this rally in the precious metals, well, it continues here. You got silver futures up about 84% year to date with an overnight high of 58.61. So we saw silver at one point, it's up about 1.5%, but it was up about 2% to a new record high. Traders are really watching this ongoing supply tightness and rising expectations of an interest rate cut in the US. Now it's a record amount of silver, and the metal flew into London in October to ease that historic squeeze there at the world's biggest silver trading hub. Now the turning point here is that it's putting other areas under pressure. So you look at the inventories and warehouses are linked to Shanghai futures. They recently hit their lowest level since 2015. So the problem is that normally you'd see some of this tightness be alleviated, and inventories in the US are quite high, but traders are monitoring any potential tariff on silver after the precious metal was added to the US Geological Survey list of critical minerals last month. So the fear of a sudden premium in America is making some traders hesitant about shipping that metal out of the country. So it offers little prospect for the relief should this global market continue to tighten further. So that's really the surrounding story at the moment here. I believe that it's less determined by the dollar index, by the interest rates, and it's really this physical squeeze that's going on at the moment. Remember, you can't just bring silver to the market. It's not something that's easily mined here, and it could quickly alleviate some of this supply constraints. So that's why we're holding full throttle at the moment. You also have a thinly traded market and a lot of speculators coming into that market as well. Now you look at the gold market. Gold's had a little bit less volatility here recently, and that's really reflected in the gold-silver ratio. We're seeing gold, it is tracking higher here. It is breaking out over that resistance point. It's up 52% year to date. The high overnight was 42.9780, and it's really aided by a little bit of that weakness in the dollar, the growing chance of the interest rate cut by year end, but it does have bigger structural support where you do have things like central bank buying, ETF demand, and that's really helped that market advance. Now you look at some key levels here. Really, I was indicating that breakout over that 42.50 level, traders are really eyeing that all-time high here up at 44.33 that was seen on October 20th, and that's on the February contract. So you look at some of these key levels. 41.33 was its last breakout seen on November 10th. That's where it went from a consolidation phase back to a bullish phase. 41.13 key trend support, 50-day moving average 40.76. Tuesday, November 18th, overnight lows at 40.32. So you look at the equity markets, global stocks and bonds are starting a little bit off on the back foot as the sell-off in cryptocurrencies, some of the hawkish comments from the Bank of Japan are really weighing in on some of the sentiment. The yen is leading the gains here in the FX markets, up over 0.5% here. And it's really the major currency against the dollar after the Japanese bond yield here for the 2-year yield rode to the highest level since 2008. You also have oil futures up about 1.5%, and back at 59.32. You have a key pipeline here. It's a pipeline that's going to connect something in the Black Sea here. It really was damaged in an attack here, so a little bit of supply tightness in that oil market at the moment. Now you look at November and you look at some of the monthly gains here. We have had 7 straight monthly gains in the S&P 500, the longest winning streak since 2021. And traders are really placing their bullish bets here on the small caps in anticipation of those lower interest rates. The Russell jumped about 8.5% in the last 5 trading days through Friday, making up the bulk of its gains for the year. So big move up in the Russell here, down about 22 points or 1% lower here in this overnight session. Looking at the interest rate expectations out of CME's Fed Watch tool. So that next interest rate decision is going to be in 9 days. It's on December 10th. It's going to be next Wednesday. Markets are anticipating 87.6% likelihood that the Fed's going to cut 25 basis points. Now you look at Morgan Stanley, they believe that there will be no interest rate cut at December. So we'll see how markets start to react as we get closer to that. Do they get jittery? Do they get nervous? Now Trump said on Sunday he made up his mind on who will be the Fed's next chairman. Trump's chief economic advisor, Kevin Hassett, is seen to be the likely choice. So you look at what the central banks, there is an indication that Fed Chairman Jerome Powell is supposed to speak here and that's going to be later tonight. But we are also in the Fed's external communication blackout period until that day after the Fed meeting. So I'm not sure if he is actually talking or not. You look at the FX and the risk rundown, well, the dollar a little bit lower here, 99.18. You look at the euro currency, 116.35, popping back up. 10-year treasury yields, 4.02%. You got the VIX for December at 1873. That's below that 20 mark. You go over to Europe and Asia, European stocks, they started the first day of the month here in the red with some declines in the defense sector. You go to Asian stocks, do a little change here. Ahead of a busy week of U.S. economic data. You got the MSCI dipping about 0.2%. We will have two separate readings on manufacturing for November. That's going to be due out at 8:45 and then also at 9 a.m. Central Time. And then you look at the ETF flows because this has been a big driver here last week in the silver market. So last week, ETFs increased their silver holdings by about 9.7 million ounces. They increased the gold holdings by about 201,000. They increased platinum by 34, and they increased palladium by about 17. So you look at the percentage changes here. Gold up about 17%, silver up 16%. They added 189,000 ounces on Friday. And you look at on that gold market, the fourth straight day of growth, longest winning streak since October 21st. So gold up about 62% this year. So we'll keep an eye on some of these things here. We're probably going to be tightening up a lot of stops, reducing a bit of risk here, kind of positioning for, going out into next year and looking at any kind of these serious corrections here as a potential opportunity to position for 2026. So you guys got any questions? You want to open up a futures trading account with us? Had a lot of people opening up accounts here last week. Shoot an email to info@bluelionfutures.com. Remember, futures and options trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.